Good morning, traders. Manny Cabrera here, co-founder of NDC Trading Academy, with today's pre-market forecast for Monday, September the 16th, and our outlook for this week in trading. Let's quickly jump to our news items for the week. Very light week, but nonetheless very significant week. We don't have any news till Friday, and of course Friday we have crude oil inventories and obviously the FOMC statement and federal funds rate. The Federal Reserve is going to be deciding whether to cut interest rates, the discount rate, one more time this year. Most analysts and most people on Wall Street, including myself, expect them to do so. The effect on the market, only we'll have to see what happens. How is the market going to interpret this? Is this going to be positive news? Is it going to be negative news? We'll see. Whatever the case may be, just be ready for it. Make sure you read your charts. Make sure you have your plan, and make sure you trade your plan. And the only thing we have after that is Thursday. We have the FOMC, the Philly Fed manufacturing, and we do have a press conference at 2:30 after the Fed meeting. So keep your eyes open for that. Let's jump right quickly into our forecast as we look at our daily chart here, and we can see very similar market headed towards the all-time high. See how it falls short here at a previous level. Market retraces for its next leg. Interestingly enough, though, we did have some support here at the 20 SMA in order to hold the market to go up. We don't really have that here, but nonetheless, we're going to see what happens with this action. Now, we've had a significant drop in volume, significant. We're less than 1.1 million, which is our sweet spot. We're right now dealing with an average of about 800 and let me show you. See that 896,000. So obviously it bodes for very slow activity, very deliberate but slow activity. So keep your wits about you. Make sure you stay sharp. Make sure that you stay consistent, and make sure that you don't over expect on this market. Don't force yourself upon the market. Don't expect this market to do things that it just is not able to do because of volume. So stay very flexible and extremely disciplined, focused, and with plenty of patience. So let's see what happens. We do have a gap here. You can see the gap a bit more clearly here in our projection chart here. As you can see, we have this huge gap in price here. Price levels that we have originally brought forth as areas of potential market movement have come true. These are areas from the past, or what we call our anchors from the past. We project to the future, and we can start establishing potential price objectives on a mid to long term basis. So that's where we are right now. If the market continues to go up, obviously first it's going to fill the gap. Resistance is going to be found here in this arrow up here. Otherwise, the next level of support is going to be right down around here somewhere. You can see that more clearly in our analysis chart here, which is 1 degree below our trade chart. There's a clear gap. We're below yesterday's intraday intraday minimum price from Friday, I meant. We have that huge gap. Market is beginning to find a bottom here. It has a trend line to the upside here. Well, first plan, what's going to happen? We're expecting this trend line to hold as our support and continue its march first to the intraday high, and ultimately, if it breaks through, potentially to this gap area here. Now, what happens after that, we don't know. But one of the most probable things is going to probably retrace off the area and then find support here. This is pretty much where the market is going to be deciding what it wants to do. Now remember, this trend line doesn't go away. So as long as we remain above this trend line, we're expecting the market to continue higher. It can run from here and potentially move higher, or it can bounce off here and move higher, or just completely fall through after you fill the gap, head lower, potentially down to this area down here initially. Now remember, this is all based on volume. Volume is key. Volume decides how quickly and how efficiently the markets move. Again, a little bit less. Let me just double check something here real quick. So far, let's see what we have here. We seem to have a little bit more volume in this contract today than we did last week on Friday. So that potentially can help us maybe have better movement today. Let's go to our trade chart real quick here. And again, that's the scenario here. That's actually our analysis chart. Our trade chart right here, and it's pretty much what I was saying to you before. You can see it clear. There's our gap, there's our intraday low from Friday, there's our trend line, and here are the possible price objectives and price. We just keep your wits about you. Don't rush this market. Remember, there's still some value left on the old contract. So nice and easy today. Don't force anything. Let the market come to you. Have a great session. Let me know if you have any questions.